Hey, Cicely, glad you're here. Hey, Eric, glad you're here. We're going to be having more people join us, and this is being recorded so we're going to be sharing this in our whole seven stream series.
Perfect. Okay, so I'm here. Let me know if you guys see the presentation.
Yes, we see it. Perfect. Beautiful. So let me go ahead and introduce you to everybody. So, for those of you who are here, my name is Catherine Bell. I am the president and founder of Titan Impact Group and the co-founder of my Seven Streams Investor Club. And what this is, it is a club that we are creating to help over 10,000 families create seven streams of passive income. And it comes from my story of what I did and what I went through from becoming a multimillionaire to losing it all to having my husband pass away unexpectedly in 2018. And because of that, I was able to take a year off and grieve because I had created 13 streams of passive income for my family. And so the more I talk to people, the more I realize that people are not set up with multiple streams of passive income. So we created this club to create seven streams of passive income because that's what the average millionaire has. So one of the things that we do is make sure that you're diversified into all the different asset classes. And so this is a whole educational seminar that we have here. George and I have known each other for several years now, and I would say he is the foremost expert when it comes to short-term rentals and that whole asset class. He's very passionate about it and very good at what he does. So he's here to teach all of you more about that and what it looks like to actually be a passive investor inside of it versus an active investor. So with that, George, take it away.
Thank you, Catherine. And it's always a pleasure being around you because your energy, it's so exuberant. It just gives me more energy, and I typically feed off people's energy. So thank you for having me, and super excited to be here. I love being part of a great cause, so always great to see you. So thanks for the invite, and we're ready to go here, everybody. So excited that you're here to learn about short-term rentals, and I'm going to be talking about building a predictable portfolio, or at least start with one property, right? Building wealth through institutional grade short-term rentals. Okay, so this is going to be an educational masterclass and partnership opportunity, and I'm going to show you our company's methodology, Empress. So super excited to be here. We'll go into the next slide here. Quick disclaimer, if you guys want to give it a read, this is all for informational purposes. We're not offering an investment or an offering here today. So all right, so just a little bit about what we've done. So we are currently generating about 2.3 plus million dollars in annual revenue, and I built this from absolutely nothing. I had $5,000 in my pocket in 2018, and now we've built it to $25 million in assets under management under our platform. And over the last 8.5 years, I have personally invested over $1 million of my own cash, and I still am investing today into our portfolio improvements, new properties. So, and we have a track record of 6+ years of investor distributions across our portfolio. So, just a little bit about us and a quick story in maybe just a journey about what I went through from day one here that took me to where we're at today. So I am from Peru and I'm emigrated here at 15, so landed here in 2000. From there, I used to actually live in an adobe house and half of my house had collapsed. So just being here today, it's for me, it's living the dream, right? Being in a room full of entrepreneurs ready and willing to go to the next level and really just better themselves through investing in real estate, right? So I migrated at 15 here and I was in hospitality for quite a while. So from 2007 to 2017, ran a marketing company and was a promoter, was an event producer. So I put up to 3,000 person events. And then in 2015, I ended up investing without any knowledge into a nightclub slash event venue, and I lost all of that money. It was actually $310,000 out of my own pocket, and I took out also personal loans on it. So that doesn't include the loan. So it was almost 400 grand. But when you fall hard, you also have to get up harder, right? You have to wake up and realize that was just the education piece. So that's what happened to me. And my rebound started in 2018. I was working 18 hours a day, and then I locked in our first deal in 2018. And by the end of that year, I had done over 10 short-term rentals in our portfolio, had done over 20 deals that included the short-term rentals and some fix and flips and also some wholesale deals. So by COVID, I had 40 short-term rental doors amongst 4 or 5 that I personally own, and then 35 that I used to rent as an rental arbitrage play, which I would rent and sublease to other tenants in Airbnb. So COVID was a reset again, right? The entrepreneurial journey, you go up and down. So COVID was a reset and I had 55 units at the time. And my reset was really the entire country shutting down and me figuring out what was my next 10x level, right? Where would I grow to? So I pivoted into experiential short-term rentals. And over the last 4 years, 5 years since COVID, we now have 28 properties, quality versus quantity, right? Doing the revenue there. And then I have a personal portfolio of 8.5 million assets. Okay, so that's quite a bit of the journey there. And here I want to talk a little bit about the division or the divide between amateur gambles and institutional certainty. Somebody that is a retail amateur, right, comes in and makes decisions when they invest into short-term rentals by emotion, right? They essentially want the proximity. They find what's available on Zillow. They're hoping for the best case scenario, and they're literally just making bets without the numbers, right? Numbers are everything, right? So, and they set up properties that are very basic, which is what I also did from day one, right? And that has changed to what I call the Empress methodology, right? Where you're learning about your one of 7 streams method here. So now today we apply a very strict methodology with data filters. We look at regulations. We look at the market demand versus supply. We always want to make sure there's stability there on how the demand is growing along supply in that particular market. So we look at the market first, and then we benchmark the properties that we're looking at against the top 10% of existing listings. So that also creates a stability long term. So when you guys go do a short-term rental, invest in a short-term rental operator, make sure that he is always thinking about the long term as well. Okay. The next thing we do is to stress test the market and stress test the properties against worst case underwriting. So we have 3 levels of underwriting: worst case, realistic, and target, right? So always shoot for the stars, and sometimes you just come in right in the middle, right? So, but for us, if a property doesn't at least cash flow on worst case scenario, even a little bit, we just don't execute it, right? So we focus on revenue driving and experiential amenities such as pools, hot tubs, outdoor kitchens, pickleball courts, just playgrounds, things that could create memories for the family. So next, what I like to do is jump in to pillar number 1 of our 3-step methodology that we're going to go to today. So the first thing we look at is the market, and we diagnose and eliminate 90% of the risk just by filtering the market. The first thing is regulatory stability, right? We make sure that we look at regulations. We need to understand there's an HOA there. We don't go for HOA properties. If the market allows short-term rentals, and if they do, great. We like to go for that middle strict regulation, not too loose, not too strict, right? So then we filter the supply versus demand. We look at quantitative data and qualitative data at the same time. Quantitative data are the numbers. So does this market sustain? Does the growth of this market in terms of money coming into the market, is it equal or less or more than the listings being posted or listed in that market? We want very steady growth, or we want more demand in that market, right? And next, we filter out all of our properties through the 20% rule. So it's what I call the revenue to purchase price ratio. So if the property that we purchase is worth 500,000 and it does not make 20% of its purchase price in revenue, then we just simply don't do it. It's got to make at least $100,000 a year in order for us to execute that project. Right. So that's what we call the 20% rule. And mathematically, this allows us to be on the safe side. Now, we average 25 to 30%, okay, purchase price to revenue ratio. So let's talk a little bit about the 20% rule a bit more. So this is the baseline, right? So in this case, it's a quick case study here that we did a Cypress, Texas acquisition. We purchased the property for $455,000, and our gross rent estimate, right, was 29% of that 455,000, and we have actually hit over between 150 to 155,000 for 2 years in a row in this property. Okay, so that's the baseline. We like to stay a little bit above 25%. If we hit 30%, that's great. That allows us to cash flow on this property. The cash flow is $1,000. Just a summary there. So the next pillar for us is what we call the sweet spot formula. So the sweet spot formula essentially dictates what our buy box is, right? We look at revenue potential. So how much money, how much revenue will this property bring in year per year? We'll look at guest appeal. What do these guests in this particular market love? Like, what are the amenities that they love? Right? What are the size of properties? How many bedrooms and bathrooms are they coming in? What are they booking all year long? Or is this a seasonal market? Is it on a strategic location that has demand drivers around? Right? We want to make sure that if we're going for a property, we are in proximity to locations with demand drivers. So what I call demand driver, for example, is it could be an entertainment center, or it could be a boardwalk, or it could be a shopping center of some sort, or the beach or a lake, something like that, right? And then the next for us is the value add potential, right? So can we add value to the property in the interior and exterior? So can we add amenities? Is there enough room to do that? Right? Can we make this pool that's already there super cool? Can we build an outdoor kitchen, put some cabanas around it? Sometimes these properties don't have any room, right? So currently we're doing a project in or large portfolio in St. Louis. And one of the properties we recently launched essentially was gutted, completely gutted. So we added a pool in the backyard, and it was an above the ground shipping container pool. We added a carport. We added outside, the outdoor kitchen, and then we added a basement as well. And that basement was a movie theater, right? And so these things add what is not just the guest appeal, but it also adds value to the entire project, the entire property, and it creates longevity in terms of how long is this property going to cash flow at that consistent rate, or revenue at that consistent rate. We love that piece as well. Okay, next, pillar number 3 is the design aspect. So we focus on experiential design, and for us is an ROI machine. Design is our secret sauce. Interior design is a direct revenue multiplier. Okay, and interior design and exterior design comes with a bit more than just the word design, right? Inside design, there are amenities, as I mentioned, right? So how do you dress up these amenities? Are you just going to throw some furniture out there, or are you going to put colorful things? Are you going to make this exterior or interior look beautiful, right? So for us, it's about these common spaces where amenities create those memories for you, right? They essentially make the people live there. So, and for us, we think about sales 101, right? And when people come in and book a listing, are they looking at the property itself, or are they looking at how they're going to feel when they get to the property? Right. So this experiential design creates higher average daily rates and higher occupancy for us. It creates better reviews and repeat guests as well. So quick case study continuation here on this Cypress property. What we did was we came in with our 2024 projections here. Our projections were $100,000. If you look at the left column here, we projected to do 100,500. Our actual revenue in year 1 in just 8.5 months was 150,000 because of the things that we did in that property, right? Now, the reality of real estate is that sometimes even when you go above the projected, there are always issues, there are always things that are going to get in the way, right? In this case, that year we had a hurricane hit Houston. So one of the buildings, which we had 3 units in this property, flooded. So we had to come in and spend additional capex, and our actual net cash flow for that year, despite of that additional capex, was still 35,000, where it could have been 45, 50,000, right? Maybe even more. So for that 2025 look, we actually hit $46,000 in cash flow, right? And then the revenue was around 155. Okay, so again, we come in conservatively, underwrite at the lowest possible worst case scenario. And then we want under promise and over deliver. And that's always the goal. So continuing here, part of the flywheel is what we call, right? When we build our STR wealth engine, we want to create a flywheel, right? So the first thing is always looking at the market. So you take the market, you understand it, and then you narrow it down to a smaller sub-market, per se. And then within each sub-market, there are what I call micro markets. So let me give you an example with a proper city. So if I'm in the Houston area, a sub-market of Houston area would be the Woodlands. Okay. The Woodlands, Texas, one of the fastest growing communities or cities in America. And then a sub-market would be a micro market would be maybe the Waterway in the Woodlands, right where all the shopping and all the restaurants and the mall where everybody likes to be right there, where there's tons of things. There's a lot of people are follow there. People love going to that area. So then the next thing for us is plugging in our acquisition rules, being super strict about those rules and those points that we mentioned in the prior slides, making sure that the purchase price to revenue ratio is right, making sure our design is strategy is there, our amenities are set up the right way, and then setting up our listing there, right? And then next is putting that to life through a revenue-based design strategy where we come in and we actually implement the finishes. We put in the amenities in there in the interior piece, and then as well as we create that environment and that scene that people love to be part of. Okay, so the insight here is that this flight wheel generates exceptional generational wealth, right? But building, managing, and maintaining it requires full-time institutional infrastructure. So now let's talk about the Empress Advantage, institutional expertise delivered passively, right? So we built an engine so you don't have to. So we invite select partners to bypass the operational headaches and access institutional level returns. So we focus on full cycle optimization. We own, manage, and optimize high-end short-term rental assets completely in-house. This goes from acquisitions, renovation, interior and exterior design, and property management. We go in and perform expert due diligence. So we acquire strictly within our defined buy boxes to maximize downside protection. As I went through in the prior slide, you always want to make sure that you're going for the lowest target, but it's essentially shooting for the stars, right? So your lowest number, your lowest revenue, that way you can overperform those numbers and create better cash flow, better returns for investors as well. And the next focus for us is dual threat returns. Investors benefit from immediate strong cash flow coupled with long-term equity appreciation. So now, supported by the Seven Streams Investor Club leadership ecosystem, myself, Catherine Bell, Amore Porter, Trevor Hicks, and Tracy Gore. I love this family, by the way. So I'm super excited to be here. So I appreciate you guys listening to this. Just giving a quick outro here. So if you wanted to take over this, Catherine here, we're super excited to be here. So thank you very much for having me.
Absolutely. So here's the thing I hope everybody got from this. And George, you said at the very beginning, like this is 7 streams of passive income, and finding an operator who really like not only knows and understands how to take whatever the asset class is and have it be extraordinary, but really is passionate about it. Like, I don't know about anybody else, but George, it's absolutely abundantly clear. You absolutely love this. And this is your whole background. It's having that part to serve and to have everybody have an amazing experience. So I know I had some vacation rentals. I do not have that same gift or skill. Having somebody like you that we can partner with to literally have our investors create extraordinary returns, as well as know that they're a part of indirectly having other people have amazing experiences is incredible. So this leads into, we are actually creating a club, the 7 Streams Investor Club. And these are the webinars that are leading up to it, teaching about all the different asset classes that get to be a part of everything that we're creating. So if you're interested in learning more about this, please reach out to us. You can put your comment here. Laura also put in the Zoom chat link so that you can get registered for the upcoming webinars and learn more and more and more about all these other asset classes. And then more importantly, how to join our club in the community. So again, George, thank you for being here. I'm super excited to have you be a part of our community and all of this. Again, this is a really important asset class to have as part of everybody's passive income stream portfolios. So really excited about that. So get yourself registered. The link is there. Super excited to have you here. And George, again, just thank you. Thank you for being you, and thank you for having that heart to just serve and make a difference for people.
My
This has been
pleasure.
awesome. Love
Thank you.
this. Beautiful. Okay. Well, with that, we are at the bottom of the hour. So we promise to honor and respect everybody's time. And again, thank you, everyone. We're looking forward to having you. Anybody who missed it, George will be back on Thursday to be able to do this again, and we'll be able to have some time for questions and stuff on Thursday as well. So awesome. George, thank you. You're amazing.
Thank you. Thank you.
Love it. Okay.
Thanks, Catherine.
Bye for now, everyone.
Bye.
Make sure to check out my7streams.org for details about the club.